What is up, y'all? Bacon here, and it's tax season again. And for those of us not working in the tax industry, yay! So I was just sitting at my desk prepping my taxes for my CPA, going through all the rehab costs, business expenses, travel, etc. You know, getting all the information split nicely into separate folders per property and what had happened, who it's going to, all the good detailed stuff. Now, everybody says cash is king, and I don't disagree, but what if you don't need the cash flow in your life right now? Or another way to look at such a ridiculous, crazy statement, what if you're more interested in growing your net worth and your long-term wealth? If you've ever heard the statement, oh, them, that's old money. Well, those families didn't necessarily become rich just through cash flow. I mean, yeah, cash flow probably helped, but they did it a lot through long-term wealth building. One thing a lot of people get into real estate investing focus a little too much on is just cash flow. I personally don't need cash flow per se. I mean, yeah, we could all use more cash to buy stuff we want, but it's not necessarily stuff that we need. I'd love to drive down to the Mediterranean, rent a yacht for the weekend, but that's not something I need to do. I'm always happy with the trips that I take, with or without a yacht. Real estate's a great way to build long-term wealth and not just cash flow. In this video, I'm going to go over some of my favorite wealth builders through real estate. They may not be that immediate cash that so many people are looking for, but in the long run, they're a huge benefit. Remember, if you like this video, you have any thoughts or suggestions, or you just hate the idea of not really caring about cash flow, make sure you smash the like button, subscribe, and comment. House hacking is an easy one for those starting out in real estate and a prime example of an alternative to cash flow. In a lot of cities across the US, you can buy a 3 or a 4 unit building for little more than a single family home. If you can handle having neighbors within your building and don't mind being the person to be contacted for any little issue, it's a great wealth builder. Don't forget though, if you purchase the property well enough and the numbers are in your favor, you can always get a property manager and just act like, well, I'm just one of the tenants. I'm a big fan of a good property manager. I think the money spent is worth avoiding the headache of being called about these little issues day and night. What's better than having your tenants pay your mortgage through their rents? And if you're smart about it, you'll stash away what you would have been paying in rent for a down payment on the next property or maybe a new business venture. Worst case scenario, you just don't have to pay rent or a mortgage. Depreciation, it's a huge one. I suggest using a CPA to take full advantage of all the possibilities, but I love depreciation. This year alone, I have over $30,000 in items I'm claiming towards depreciation. That doesn't include the items that I started depreciating last year, and none of it includes the buildings. Your CPA can go into the specifics, but you can depreciate just about everything from painting the property to the new appliances you just purchased to obviously the buildings themselves. Spread that across multiple properties and boom, in the IRS's eyes, you made no money for the year. When buying rehab properties, depreciation can be your best friend at the end of the year. I love doing taxes because I know I'm about to get a chunk of change back, which I'll roll either into the next purchase or pay for the rehab costs of the current property. The interest paid on a mortgage is a deductible, which will make you look like you've made even less money. Again, and like most non-cash flow related financial benefits, let your CPA handle this one. But hey, I don't trust the IRS, so I like using a professional that I trust. Forced depreciation, another killer, especially in multifamily properties. If you can buy the property at 60-70% its actual value, awesome. It may cost you a penny or two to rehab the property, but those costs are kind of covered again through depreciation. But more importantly, you can raise rents, go get a new appraisal, and possibly refinance the property at a higher price. Then you can pull out what you spent on the rehab, still depreciate the items and the cost of the rehab, all while not really paying much in taxes. Or you can always just sell for a lot more and use the next wealth builder, the 1031 exchange. The 1031 exchange is just a simple way to avoid paying taxes or deferring taxes on the capital gains produced by the sale of one property and using it to fund the purchase of another. To do this, you basically just fork up the money you received from the sale to a third-party intermediary to hold the money you've made from the sale till you can purchase a like size or bigger property. There are time frames to follow, so it's not that easy. One, you have to designate a new property in writing to the intermediary within 45 days. And two, you have to close on the property within 180 days. Also, again, you're going to want to talk to your CPA before going through the hassle of a 1031 exchange, because financially, it may not be worth it. So, if you haven't noticed, I'm not a CPA, and I definitely say get a CPA. The right CPA will save you tons of money on taxes, they'll help you with active wealth building, present and future, and they'll be useful if you ever get one of those dreaded audits. Yeah, you may be able to get TurboTax for free, or maybe like 50 to 100 bucks, but I'd rather pay $300 or $400, quadruple my tax returns, and drop my tax bracket to the lowest possible bracket. This is one of the reasons I'll always get stuff like stimulus money, because they base it off of your taxable income. And when your taxable income is $100, you look pretty poor to the government, so you'll be in line for assistance whether you need it or not. That's why every week I'm donating or just giving away 50 bucks, because I don't need the stimulus money, but I'll always get it thanks to my taxes. I hope you liked the video, found the information useful. Make sure to remember to smash that like button, subscribe, and comment, especially if you'd like to get involved in my weekly giveaway donation. I've been giving away to animal charities. I gave it away for kids cancer. If you'd like to get involved, comment. Cheers.